What's up, everyone? I have an extremely special guest today for you, and what we're going to talk about is how the current situation of the pandemic is likely going to change the way realtors do business forever. We're going to talk about how the current situation is affecting investors, because he's one of the most knowledgeable real estate investors I've ever met in my life, as well as it's going to impact the real estate industry as a whole, and how you need to be creating multiple revenue streams and how to do so that you become less susceptible to things like this, and make sure that you create a business that's robust and can actually scale during this time instead of being worried about not closing any deals. So let's get straight into it. Welcome our special guest and learn about how to dominate during the quarantine.
Hey, so I push and I grind and I push and I grind, cause I know one day it's gonna pay y'all.
What's up, everybody? Super stoked to have you back on here, and back my only returning guest, Connor Steinbrook from the Investor Army YouTube channel. I'll link his channel below. Way over 30,000 subscribers. This guy's absolutely crushing it. Now one of my best friends and business partner on things like our social strategy mastermind, as well as a number of other initiatives that we're going to be launching over the course of this year. So this is going to be an incredible video. Connor, I've said this to so many people behind the scenes, is one of the most knowledgeable people about the real estate industry that I've ever seen, from an investor's perspective as well as an agent perspective. So what I want to get into in this video are how the current pandemic is affecting real estate agents, how it's affecting the real estate market, and how this is a massive wake-up call to realtors that are doing business the traditional way. This is something, again, make sure you stay tuned, because we're going to talk about how if you're not doing certain things during this time, I certainly believe that you're going to be feeling it, and I'm not too sure how you're going to last once the dust settles. So this is a massive wake-up call. We're going to talk about things that you should be doing, how you should be restructuring your business during this time, because we're going to share with you a couple strategies of how you should be doing that, especially during the quarantine. So Connor, welcome, and why don't you give yourself a brief little intro, and then we'll get straight into the value.
Yeah, guys, my name is Connor Steinbrook, full-time real estate entrepreneur, investor, agent team leader, just under about 400 agents across 28 states across the country. Social media, Investor Army is my main thing that people know me for, my YouTube channel, primarily real estate investing. But what we really talk about is what we're going to probably talk about today, which is the elimination of risk as a business owner, which is by doing so having multiple streams of income, equity components to your business model, passive income components to your business model, and having something that duplicates outside yourself. Because if you can't work and trade energy and time to create that income stream, you have no income coming in. And this is why so many agents are freaking out, Mike, because they have one income stream and it's tied directly to their energy, and they can trade that energy to create that income. And if they can't, or they can't go out there in the marketplace and do the traditional activities that they're doing right now, showing houses, working with clients, and they're stuck at home, they have no income. So this is why you need to have multiple streams of income. We can kind of talk about this as we go through here, but that's one of the biggest things I see. And also the fear right now is the uncertainty of the future. Is this a 1 month, 3 month, 6 month, year, 2 year? What is the damage that's going to be done? How long is this going to last? And it's uncertainty that really puts the fear in people, I think. And a lot of people are seeing buyers back out. You're seeing lots of cities. So I have agents operating my team now in 28 states and going into our third country. So I'm getting to see different micro snapshots of different markets, how it's affecting certain markets. Some markets are relatively untouched, but some markets you're seeing title companies shut down. You're seeing automatic extensions by the real estate commissions, allowing people to kind of delay closings. But think about it from different shoes to stand in. Let's say that you and I were I was a seller, you were a buyer, and I was a house flipper selling my house, and you were buying the property from me. Well, it's great that's an automatic extension for 2 weeks, 3 weeks, a month. But what about me, the one that owns the property that has $200 a day in carrying costs on that property? What about, there's lots of little things that are going to happen. What about not being able to evict people in certain markets? What about people knowing these rules so they purposely are not paying their mortgage because they know they can't be evicted? Lots of different things are going around, and it's happening so fast. It's just the pace of which this is happening, the blind side. It's kind of like getting in a car wreck. Nobody really knows how to plan for it because everybody's just spinning, and it takes time to change policies, and people are trying to put things in place. I mean, this big multi-trillion-dollar spending bill, how could they even have read it? Like, I guarantee you they don't even know what they just signed, and we're about to see all this unfold over the next year or two. So it's going to be interesting, but let's dig in here. What can I help with? How can I help your listeners?
Awesome, guys. So yeah, a couple of different things, and make sure you stay tuned to the end, guys, because we're going to talk about from the agent perspective, and you're going to really have an awakening, I think, by the end of this call. So, and again, if you want to know more about the mastermind that Connor and I run, it's an incredible opportunity right now where We've extended it for just $1 to join. And then again, if you get value from that, $47 a month after. The feedback in that group has been absolutely insane. Weekly calls, we're getting people saying that for one call, they're getting more value than some of the courses that they bought for $500 to $1,000. So I'll put the link in the description as well as the pinned comment. If you want to join, you can check out the website, see some of the testimonials. But the agents in that group are thriving right now, while a lot of the other agents are struggling to survive. So Connor, first thing I think how we should lay it out. The first thing is how this is impacting the real estate market. Then I want to chat about how it's impacting real estate agents. So from a market perspective, buyers, sellers, investors, we've seen things like the jobless claims statement that just came out, 3.3 million people that are filing for unemployment and jobless claims, but that's not accounting for the people that are on paid leave of absence. It's not accounting for the people that are temporarily laid off. They're saying that this could 10x. So 30 million people out of a workforce of 100 million people, 30% of the United States workforce could be laid off or not working. We've got things like 0% mortgages with deferrals coming into play. We've got things like the stimulus relief bill. So let's talk about this for a second. How is this going to impact the real estate market? Tenants, not being able to be evicted, but they're getting paid money from the government that's getting printed out of thin air. What's going on in terms of the real estate market right now?
Oh my gosh, we could go on for like literally hours about this, but I mean, just some of the things that you're seeing all around the country right now. Think about, people do things in life based off emotional patterns. And when you're having many, many years in a row, things are going well, you want to upgrade or you want to move into a new house, and you're looking at your accounts going up, your job is strong, your job is stable. And now a lot of people were in a contract to buy a house. And in this long closing period, 21 to 35 days, in a matter of no time, here comes this health crisis. And it's caused a lot of uncertainty. A lot of people are pulling money out of the stock market to bring to the down payment on certain houses. Some people just can't literally close right now. So that's one thing that's happening. Another thing is they can, but they don't know if they want to, because they don't know if they may have a job or not. And they don't know if they're going to be able to even support themselves in this new massive expense they're about to take on. Maybe something that's too big of a bite to take on now. And they're choosing to back out. And they're basically in certain markets being given a pass to. So you're seeing lots of buyers back out of deals or fail to close. And also, how are you going to, say that they have to close if they had the money just a month ago and they were going to bring it out of the stock market and now they don't have it? It's kind of, it's a really gray area of what's going to happen. Now, from the investor side, this is dramatically going to increase carrying costs. A lot of guys, if you guys are sitting there and flipping houses, get these done as fast as possible, get out of these as fast as possible. 40K flip profit is now going to be 20, 10, or 0, depending on how fast you can get these projects done, get them on the market, because there's less buyers right now, just overall, because who wants to have people, who wants to be going in houses when you don't know whose house you're going in, when they could potentially be sick. They're all, so just the overall reduction of people looking for houses, people putting the house in the market because they don't want to even just put themselves in this risk. Even if they're young and healthy, they don't want to take that risk because their parents are older. They have friends that have health issues. So like a lot of people are just kind of recluse, hiding at home, which creates less activity in the marketplace. When there's less buyers out there, it means it's less likely to get your house sold. Now, at the same time, on the flip side, on investor perspective, on that because people are making decisions based off emotion, just like they're pulling money out of the stock market, people are trying to go to a cash position, which means these homeowners that were trying to sell a house for $160,000 a month ago that has $60K in equity, they may be willing to dump the property just to get out for $40,000 and get their money just so they can hold it in their hand and breathe a little bit. And so you guys may be able to pick up a property that you may not traditionally be able to buy at the price that you're able to buy it, that you were having to try to pay to buy it just a month ago. And then what happens if someone sells their house off emotion, way lower a price point than they normally would, and this bounces back in a month from now? You just had a little window of time to pick up some really good deals. Now, what I'm expecting also is you're going to see a lot of foreclosures, short sales are going to pick up, REOs are going to pick up, low equity types of deals are going to pick up. Guys, you're going to see, if you're an investor-minded individual, you're going to see a lot of subject to types of pickups, owner finance wrap opportunities, buying direct to the seller with owner financing. So it's going to be crazy, man. Like, I don't think anybody's prepared for this. And so those of you guys who really sit down and kind of turn the TV off, turn the cell phone off, turn everything off, and really kind of take out the whiteboard, take out the poster boards, and literally map out an intentional plan to capitalize on this and execute it quickly and aggressively, I think this is a huge opportunity. Now, just like in anything in life, most people are always negative. They're going to see this as a negative thing, but I think a lot of people are going to do really well that use this opportunity the correct way, when everybody else's attention's pulled off on the sidelines, I guess.
Yeah, and I think that's an important thing to note is I think a lot of people are underestimating what can happen from this. As you're starting to see facts come out, right? A lot of what's happened over the last couple of weeks is emotion, speculation, projection. There was no hard data, there was no hard facts. But now that Q1's wrapping out, there's going to be statements from companies coming out about how they're actually doing. As we start to see numbers come out about the reality of the implications of what's happening, I think this is being underestimated by a lot of people, and I think you shouldn't be taking this lightly. Now one big thing that a lot of people are asking and curious and speculating about is, do you think 2008, 2009 can happen again? Do you think it's going to get to the point where it's going to get that serious, or what's kind of your take on that before we roll into real estate agents?
Yeah, personally, I don't. I mean, I think a lot of what caused that was a lot of unethical activity. I mean, think about the changes with Dodd-Frank and all the rules changed, and think about the appraisal process. I mean, think about what happened during that time. And I wasn't investing at that time. I actually came after last crash, but most of my close partners and mentors that really kind of helped me get into the business did. And a lot of what caused that is it's just for one, the craziness of no state income loans, no doc loans, and people having relationships with appraisers in the marketplace. For example, let's say that I was flipping a house and I wanted to sell the house for $350,000. True market value is $300,000. And Mike is a good friend of mine, and he's an appraiser. And I'm like, hey, Mike, why don't you come on over here? And I'm not going to have anything in writing, but can you just make it come out to $350K? And the mortgage broker is getting a bigger commission. Everybody's getting a bigger commission. Agents getting a bigger commission. Everybody's just like, yeah, it's $350. I think it's worth $350. And the homeowners that's about to buy the property doesn't have any idea one way or another. And then it gets appraised for $350. Now there's a house that's worth $300 that's appraised for $350. So that's why you can't pick your appraisers now. Lots of different things that were going on during that time period that have been kind of fixed, so that going through this correction in the housing market, we should probably not see a lot of the same things. I don't think it's going to impact too much. I do think you're going to see a correction in the higher price point markets. I think houses are going to sit a lot longer. And for those who own the property, that's a lot more carrying costs, which means you're going to have a lot lower profits. And I think the big hurdle right here is this health issue is going to really affect the foreclosure policies and eviction policies in a lot of markets, especially with jobless claims going up. It's like you're going to have a lot of people saying, well, you can't just evict someone right now because it wasn't their fault that they lost their job because of a health crisis that they didn't cause. And the person that owns the property is like, well, my job is to own property that creates cash flow. So really, to be honest, it's going to be crazy. I don't know what the answer is and what's the right thing to do. But I don't think it's going to end up the way we saw before, even though you are seeing some of the craziness with certain loans coming up. I mean, you're hearing 500 credit score loans on the internet before, or on the radio before this even happened. So there's a lot of commonalities of it, but a lot of adjustable rate mortgages are going to kick in, and people are going to get caught with their pants down. They couldn't afford the payment. Now they're definitely not going to be able to afford the payment. So you're definitely going to see foreclosures pick up, REOs pick up, short sales, but not to the level of what happened before, in my opinion.
Definitely, man. So I think that's awesome to get a little glimpse from somebody that's been around the block and has extensive experience in this. But now let's talk about the number one most important thing right now, which is how this is a massive wake up call to real estate agents, right? You look at masterminds that we're hosting, you're looking at online forums, Facebook groups, everybody's panicking. Everybody's in a state of complete chaos right now, not just because of the market, but because of how they're realizing they're doing business, right? A lot of people in real estate, realtors, consider themselves entrepreneurs, but at the end of the day, they're almost an employee to the system because of the fact that, when they're one single source of income was just wiped out and taken away unexpectedly, now they're in the same position as employees that were getting paid a salary are in. And I think this is a huge wake-up call, not just to agents, but also to brokerages, the traditional brick and mortar brokerages that were seemingly hanging on by a thread. And I think now that thread is almost on the verge of snapping. So, you see people like you and and I get a lot of people reaching out, seeing my stories on Instagram, talking about, why are you so relaxed during this time? You're a real estate agent. Aren't you struggling right now? Things must be terrible in your market. Well, yeah, they're terrible in the market, but they're not terrible in my business because of how I've structured it with multiple income streams. So why don't you dive deep? Because you're, the master of, this model. Why don't you talk about how real estate agents have traditionally done business? What are the implications to standard traditional brokerages, and what should realtors be doing going forward and leveraging this as an opportunity to restructure how they're doing business so that they don't become susceptible to how this goes on?
Yeah, so that's a lot. I'm going to try to get all in one. First of all, you're going to see a ton of brokerages go down. You're going to see just what happened back in 2007, 2008, 2009. If you guys were in the business at the time, back in that window when that crash happened, half the industry, 50% of agents let their license go inactive. Franchise owners went down big time. One of my partners here at EXP is a man named Jack Stoker. He was the biggest regional owner for Exit Realty in Texas. And the crash in 2008 basically wiped him out so much he had to sell out to his partner to get out of it. So a lot of people are going to be looking for an exit strategy to not have to take on risk and overhead costs. And right now, when people can't go into a brick and mortar office, there's really no need for it. And I've been on calls all week long. I had a 3-hour call with a broker of 150 agents looking to partner with us at EXP because they don't want to carry the overhead going into the recession. So I think the brick and mortar brokerages are going to get affected. We're not going to name out big names right now, but there's been news stories coming on just today about some of the biggest brands out there firing 15 to 20% of the company, essentially just to kind of get through this wave. So I see a massive landslide of brokerages moving away from brick and mortar into cloud-based brokerages like EXP and the other ones that are popping up around the country right now. And that's just what's going to happen there. Now, on the second side of second part of your question, I've always been preaching that agents need to do that investors need to be agents and agents need to be investors. They need to do both. You need to do both sides of business. So if you're an investor, you have a huge opportunity right now because this is what we've been waiting for. Now, if you're an agent, it's going to be a little bit tougher because sales are tough in a recession. So if you're doing both sides effectively, it does not matter what happens in the marketplace because you can capitalize on one side or the other. And the problem with the traditional brokerage model or how traditional agent runs their business is it's one income stream relying solely on that active income, meaning their energy put in to create that income. Right now, you guys can't go out there and create an income. So you need to start thinking of how to position yourself going forward. And the only way to structure a business that you're protected is to have multiple streams of income. You have to have more than one income stream because if one income stream disappears, what are you going to do, right? So you're living a very risky lifestyle with one income stream. And when you think about it, that is what a traditional real estate agent does. They have, they're a flat fee shop, one of those 100% shops, but they can't, if that income stream disappears because they can't sell houses, they're basically out of business. As well as they're out of business each month, their income is zero until they sell a house. And then they have fluctuations of income. This month they sell 6, next month they sell 2, next month 4, next month 0. And that fluctuation of active income causes stress. So they need to add a residual component to their business model that builds up while they're building the other income streams. So they need to start making their money in sales and putting into real estate, rentals, notes, building a team, right? So the 4 components to create wealth, I'm going to break them down here for you guys because an agent does none of these first off, they have to have multiple streams of income. This is self-insurance and diversification, protecting yourself for something like we're just dealing with right now. Second thing is you need to have equity, some type of ownership of a business, equity through ownership of real estate, equity through stock awards, something that gives you equity somehow, because equity builds up as you're doing something else with your time. Now, the third thing you need is to have some type of residual income component, meaning something that comes in after you've already traded your time to create that income. So my mentor gave me that saying similar to what you guys have heard before. If you don't work for something that works for you while you're sleeping or working for other activities, you're going to die working. You have to have something residually coming in. That's why if you own rental properties, notes, for example, my brokerage gives me a revenue share model. This week alone, I've made $4,000, while even if I didn't sell a house, I'm going to be okay, right? So you have to have multiple streams of income, equity, passive income. Last thing is, guys, you can create a great income with this. This is a pin. Selling houses can create a great income. It'll never create wealth. You can only do this through duplication. You have personal success, then you have real success. Personal success means you do it all on your own. And every single thing is done by you. Real success is what an entrepreneur does. They build a business. They build a brokerage. They build a team. They have some type of other business that they're running alongside their sales business, where they have employees. They're running a mortgage title company or something like that, the only way you're going to get to where you're going to get to is to have people working with you. You cannot do everything on your own. And the solopreneur BS in this world, to sell coaching courses and stuff is just not true. Name one person that you know that's a decamillionaire that did it on their own. Put it in the chat box. Someone, put it in the chat box. I dare you. And you're going to find someone and you're going to be like, oh, well, this person. And then you're going to find out that that person had a bunch of people around them with the team. So you need to start thinking how to get outside your personal success, duplicate yourself, whether it maybe even be just duplicating yourself with videos like this, something to leverage your time that you created once that's duplicating yourself out there in the marketplace. So we're going to film this podcast one time. It's going to get hundreds, if not thousands of views. That's duplication. So duplication, residual income, equity, and multiple streams of income creates a protected future for yourself. And the traditional brokerage role or agent role in a normal brokerage gives you none of these. And that's why they're all freaking out right now, because they're not protected. And they all know this stuff, or they've heard it one time and it goes over their head. And then when the life crisis hits like this, they're not prepared for it. And that's why you're seeing a panic by a lot of them, or with a lot of them, unfortunately.
Yeah, man, I think that's so important because, again, this is a rude awakening for a lot of people that were struggling with, one source of income. And another, benefit to having multiple streams of income, especially like you say, if it's residual, is your emotions are tied to your transactions. So if you're doing, like you say, 6 deals, 0 deals for 3 months, and then 5 deals, and then 1 deal, you fall victim to your emotions following that pattern, which is really tough for relationships. I know I've been there in the past. It's really tough for your mental health. It's really tough for your physical health because, if you're high on life whenever you're closing multiple deals, and then you're in, this mental state of anxiety whenever you're struggling and you need the next deal. And that way you really struggle as a realtor to close deals because people can sense that you need this deal. So you're being a little bit more pushy and a bit antsy. So I think if you've got, income streams, maybe $5,000 a month coming in passively, you're at a state where if you don't get this deal, it's okay. And you're able to actually enjoy what you're doing as a real estate agent. You can have more fun. A lot of people get into the business because they say they're passionate about real estate. Well, they quickly lose that passion when they realize that they're doing no deals and they're struggling. And now it goes from loving to work with people and helping people to, I need money right now because I'm struggling to survive. Whereas if you follow the 4 pillar models that you just explained, you're able to build a better business and a better lifestyle ultimately. So again, guys, if you want to know more about the different types of income streams that you can create and having us help you create them, check out the mastermind again in the description. Connor and I work with a lot of agents that went from the traditional model and want to build multiple revenue streams, whether it be through online courses, coaching people, social media content, and a different style of real estate business. We have so many different angles that we've proven ourselves, and we really want to help you guys get to this point so that you're not so susceptible to unforeseen disasters like this happening that you simply can't predict.
Well, I mean, it's good that you brought that up because a lot of people think of their business only as far as the income comes in. And when you guys really start thinking about business on the right in the right way, you need to think about it as far as income, time, and emotion. And I'll break this down for you guys to understand this. So income is great, but you got to look at as far as how much time it takes to create the income. So first off, income, how you make the income. Is it through active income or is it through residual income? 2 real estate agents make $100,000 a month or $100,000 a year, however it is, same income. One has 2 different lifestyles. One's doing it through active income, one built a team, and is doing it through residual income. One's coming in by training 60 hours a week to get that income. The other one's sitting on the beach coaching their kids' soccer team because it's already been created. Now, let's say you both make $100K on a month, every 6 months, every year. Same income, but now look at time. How much time did it take to create that income? One person's working 20 hours a week. One's working 60 hours a week. One makes more money than the other one because time's related. Now look as far as same income, same way they made the income, same time to the exact second to create the income, but let's look at emotion. Some businesses are seasonal, like real estate agents right now, which makes me sick because a lot of my partners and families are going to be affected by this. We're getting ready to go into peak selling season, which is the summer. And so you need to start thinking about emotions. So for example, if you guys are investors, let's say you both spent the same time, made the same profit, but you had a deal that was just a nightmare. Your contractor stealing from you. You had cities that you didn't understand you were working in. You had to relearn the city plans, whereas another one was a quick paint carpet rehab. 2 different emotional levels. These 3 pillars all go together to create the happiness of an entrepreneur. And it doesn't matter if you're making a lot of money if you hate your life. And that's what a lot of people don't understand. And so sometimes you may pass on a deal because of emotions, because the money's not worth it for you anymore. And as you guys get more successful, you'll realize that you're like, well, it's not worth my time and energy to go do that deal, and you'll pass up on deal. So I'd start thinking of it on all three of those levels. The other thing is, when you're doing only an active income business model, you will cap. You cannot push past a ceiling at some point in your career. Just like an athlete, you get to a peak performance level, and a lot of people in real estate hit this between 100 and 150,000. Very few break that. Very few pass through that level, and when they do, you're hearing about these individuals. Well, yeah, they're in Manhattan, or they're in, San Diego. Well, if you're making $500,000 a year in San Diego, that's like making 150K a year in a normal market. But your cost of living, taxes, everything is higher. And so it's in a relationship, you basically the same lifestyle as 150. Now, usually what you see is a fluctuation of about 20% positive or negative from the year prior to what someone's making. So if they made 100K last year, they may make 120, or they may make 80 this year, usually. But the problem is, you go from struggling your first year, you start making money your second year, and you go up and up and up, 50, 100, 150, 200, then you peak. Then that next year, let's say you're 6 months in, you made 200 last year, now you're only 50K for the first year. That emotion kicks in. Oh, I'm underperforming. Maybe, and you start going down these doubts, and you start fighting with your girlfriend, and it just compounds. When you work for residual income and you work for equity, these always build, and progress creates happiness. And as you layer, you can always push past that ceiling, because there's no limitation to how many rental properties you can buy. There's no limitation to how big a team you can build. There's no limitation to how much equity you can own in different things that you're building. So you need to start thinking of ways to build something alongside your sales business that can grow as you're growing your sales business, and use it as a complement, symbiotic with what you're doing already.
Awesome, man. I think that's incredible for people to understand, especially it couldn't be more relevant to the time at hand, because, not only is this, putting perspective into people in terms of how they've been running their lives and their business, but also it's, with the quarantine, it's a great time to take a step back, take a breather, reflect on how you're doing business and how you would like to do business, what your current lifestyle is like, what you would like your lifestyle to look like, that kind of thing. So guys, it's time to go start taking action, right? If you want to know more about these income streams, creating your own coaching business or whatever you want to do, if you want to know more about what Connor and I have done in order to put ourselves in a really strong position during a time like this, during a pandemic, again, check out the Social Strategy Mastermind. We'd love to have you in there. Also, make sure that you go subscribe to Connor's channel, because both of us are traveling multiple videos. We're dropping videos a day now during the entire quarantine. So we're here to help educate you. We're both taking two different perspectives from the real estate market, as well as additional markets that we're diving into right now, to share them on our channel. So go give him a follow. He's a guy that I've looked up to and have been modeling my content after for quite some time. So you'll really enjoy his stuff. And otherwise, guys, just comment below. Let us know what's happening in your market. Let us know if you have any questions about what we're doing, about what's going on. But otherwise, it's time to get back to the dungeon. It's time to get back to grinding out, because we've got our own businesses to run. So Connor, man, thank you so much for providing some insight on how realtors are doing their business, how this pandemic is going to affect the market. Any last words, brother?
Yeah, I mean, just stay positive. I mean, I think a lot of people are overreacting, and this may be something to overreact to. But let's let it become something first before we overreact to it. I get it. People are losing their jobs right now, but people are acting like this is Armageddon, and it very well could become something that is very difficult to handle for a lot of people. But what if it blows over like a lot of other people believe? So you have two different ways to see it as perspective. You're looking at an optimistic mindset where you're still doubling down, 10xing down your energy into your business. You're keeping on going forward. You're keeping the momentum going, so that when you get back to your normal income producing activities, you're ready to hit the ground running with momentum. But a lot of people are retracting, taking time off, procrastinating, playing poor me, and what happens if this blows over in a month and you have to re-ramp everything up? You're behind the eight ball, and everybody's prepared to hit the ground running once it kind of starts back and we have this jump start again. So I'm looking at it from two different perspectives. Positive, continue on doing what we're doing. If it gets worse, adjust to it and adapt to it. But I've wasted a lot of time in my career worrying and complaining about things that never happened. And then those thoughts that you waste today on something that never happened tomorrow is a reduction of your stress, or is a reduction of your income, and causing you more stress than you need to deal with. So I try to always not worry about something until it happens. That's a big problem that a lot of people have. A deal closing or not going to close. Think about how many times you guys have had a deal that looked shaky, that you freaked out about because you needed it to close, and then it closed anyways. But if you had taken all that stress, all that focus, all that time and effort and energy, focusing on that deal not closing, and put it into something else, your income goes up. And on the other side, it's like on the negative side, why put yourself through stress if things, and then if things do go, all the world ends, all you got to do is say, I told you so. Right. So it's like, what's the point? Because if they blow over, you just took a lot of time off of your plate, and you basically hurt yourself for no reason. So I just stay positive, guys. Let's hope for the best. I hope everything's going well with your families and yourself, and that this doesn't affect you too much. But just keep doing what you're doing. I would turn the TV off. I wouldn't be watching it, because the more TV you watch right now, the more you're going to hate your life, because it's a lot of that's fueling this. And just keep focusing on what you can control, which is batching your content, creating content, learning new skill sets. We were talking about this before, taking speed writing classes, speed typing classes, reading again, doing things that you're forced to do because you're stuck inside. But don't just waste this opportunity. That's what I see it as.
There we go, guys. It's time to put the pedal to the metal. Time to double, triple down on your business. Use quarantine to your advantage. Do some self-reflection, better yourself, improve yourself. Again, thanks so much for tuning in. As always, guys, go check out Connor's channel, and we will see you next time.